Your ability to optimize your use of time is vital to succeed in business and in life. And I'm going to go through a number of significant reasons why I'm saying this. Time optimization is saying to me that time, once they are lost, they cannot be regained. Time once used and used in the wrong way cannot be regained. So it's necessary that you really take the time to ensure that you're optimizing your use of time. The second concept that I want to put to you is optimizing the use of your talent. And this for me is also important because we have many persons today investing time, talent, and resources into nurturing talent that is not a good value proposition. As time progresses, I will explain what that means. And this is something that you want to focus on, and you want to ensure that as you are building talent, as you're nurturing that talent is a strong value proposition and it has an audience that is willing to pay for your talent. The last concept that I want you to take away here is resource optimization. And as you look at resource optimization on our topic today, I want you to also consider the importance of having the right human resources on your side, the right technical resources on your side, and the right capital resources on your side. So I end this part of the program by asking a simple question. Are you optimizing your use of your time, your talent, and your resources in a manner that best serves you? Having said that, I want to welcome each and every one of you to another broadcast of Smart Investment Decisions. Now, on these programs, we discuss a number of issues relevant to investment. Again, this is not investment advice. When we are doing a one on one with you to truly diagnose where you're at, we can then prescribe. We have a team of subject matter experts that will help you to make better business and investment and decision. But on these programs, we are likely to be talking about home ownership. We are likely to be talking about real estate investment. And definitely, we're going to be talking a lot about business startup and business scale up. We will also, from time to time, be looking at various financial markets, including the stocks, bonds, mutual funds, hedge funds, and ETFs. Today, I want us to talk about a very important topic. And I choose to talk about this topic, which I'm going to call money management. And I'm talking about it largely because of some statistics that really is interesting to understand. Now, what we are seeing today in the United States, and let me say this, United States is without a doubt one of the best countries to live in. And I'm saying this for many reasons. In the United States of America, it's quite easy for you to access debt capital markets. It's quite easy for you to access equity capital markets. It's quite easy for you to access hard money lending. It's quite easy for you to access credit capital markets. And not the least, it's quite easy for you to access creative and smart financial markets. Now, largely because as an entrepreneur, as a visionary, as an innovator, you are in the place where you're able to access markets and make things happen quickly. One of the fastest moving countries in the world. But having pointed out all of these unique features of the United States of America, I want to point out some challenges that over 50% of the American population are faced with. Now, American population today, it's a little above 333 million. Out of that population, we are seeing approximately 70% of that population that has a credit card. Now, we have between 34% of the population that has between three and four credit cards. That's a very huge number. In 2022 alone, what we have seen is that in excess of $164.3 billion was invested in the credit card market. Now, that justify my argument that America is definitely one of the best countries to be in, because you can see the large sums of monies that are being circulated in an effort of stimulating economic activities. But I want to point out a few ills, and this program will seek to address some of those ills. Among the wonderful things that we're seeing happening in the United States of America, we're also seeing that 32% or about 90 million Americans that needs help with debt support. That means that they're buying debt, but they do not fully understand that debt instrument. Today's program, we will go do a deep dive into helping you to understand debt instrument and why it is necessary for you to really take the time to understand debt instrument. So if you're joining me for the first time, welcome to the second broadcast of Smart Investment Decisions. And we're going to be doing a deep dive into money management techniques. On today's program, we're going to be covering three important headings. The first is what I call proactive leadership, and I will give a brief explanation as to what that is. I will talk about the common denominator, and I will give a brief example of what that is. Last but not least, I will talk about understanding capital resources. And here is where we're going to do that deep dive, because it's right here you will begin to form your opinion of things that you should know when you are attempting to access financial markets. Again, I believe it is necessary because we've seen in excess of 53% of the American card holders, which is over 90 million persons, that needs support. Now, so those are some of the areas that we're going to be covering today in our discussion. Now, let me shift attention now a little bit to a few other concepts. I want to come straight into what is proactive leadership. In business and in life, you want to be proactive. All right, it is absolutely necessary to be proactive. And to be proactive, there are three essential characteristics that stands out, whether you're in business or whether you're applying these techniques to your life. In my books, I talk a lot about this, and I'm transferring this information to you because I believe it's necessary. And if you see it is important to you and you apply it to your life, I want to assure that you may see significant shift in your money management abilities. These are techniques that we have used at Global Capital Inc., 10X Branding and Marketing LLC out of New York, Pitch Deck, and they are not only serving our best interests, but they're also serving our clients' best interests, and they're getting tremendous results from it. You too can get better results out of business and out of life. Now, when I talk about proactive leadership, what exactly are we talking about? We're simply saying that you want to master three essential techniques. One is the ability to think ahead. Two is the ability to see beyond problems. And three is the ability to take informed action. Now, if you apply these techniques, the next time you're going to purchase your home or you're going to buy your first home, you will get better results. If you were to apply these techniques when you're going to invest in real estate or your family unit, you will get better results. If you apply these techniques to starting your business and growing and expanding your operation, you will get better results. And I'm going to give some examples to what I'm saying here. You want to be able to think ahead. And by thinking ahead and purchasing your home, it will allow you to get the right information. If you listen to my last broadcast, I talk about when you have the right information, instead of buying your first home as a liability, you purchase your home as an asset, as an income producing asset. And there's a number of techniques that you can use to achieve this. Now, what exactly does it mean to purchase your home as an income producing asset? It simply means that you purchase an asset, and instead of the asset is draining your primary source of income, the asset itself is generating an income and offsetting the cost of that debt and leaving money back for you. So you have monies in your pocket for you to build up your wealth even faster. When you master the art of thinking ahead, you're in this position of strength. Now, hear this. What I've just said, I'm quite certain that many persons are saying, but there's a problem. I don't have the disposable income to even make an investment in the first home. And here is where, again, you need to master the art of seeing beyond the problems. And we have a number of master classes that we are hosting from time to time to really whet your appetite when it comes to mastering these techniques. One of the things I often say is that there's no limit to capital resources that is out there. And one of the things that I've learned is that the quality of relationships that you have with the right people is a predeterminant of how far you're going to go in business and how far you're going to go in life. If you take away anything here, I want you to take away here that your problem is only as big as the people you don't have in your life, the relationship you have not yet invested in. But if you begin to invest in the right relationships, the right people, you will be able to attract the right people that's going to help you to see beyond the problems. And over a period of time, you yourself will develop the mindset, you will develop the mastery to now start seeing beyond the problems. Many persons become stuck in the problem zone. You never get to go beyond the problem. On this platform, we are going to be showing you tips and techniques and systems that you can use to start programming your mind to see beyond the problems. The last concept on the first heading that I want to talk about now is the ability to take informed action. Now, what exactly I'm talking about? So the next time you're going to purchase your first home or purchase your second home or a home, the next time you're going to think about investing in real estate or growing and scaling your business, you want to apply these three techniques. What exactly do I mean by the ability to take informed action? Now, there are many businesses that start, and what the statistics are showing is that 50% of businesses fail within the first year. 20% fail by year five, and only a small percentage of that number survive by the 10-year cycle. From the research that we have done, it has enabled us to develop what we call the business success ecosystem. And in the business success ecosystem, we give you a step by step approach that is going to position you to optimize your success rate. And again, these are systems that we have developed after years of studying the top 100 companies in the US and other parts of the world. We are operating in the US. and we're applying these techniques in the US. Of course, are new in the business market over there, but it is working tremendously, tremendously, and we are here to provide those type of information to you. You see, let me explain what is informed action. The ability to take informed action means that you are not dependent on yourself only. In the event that you don't have all of the information in relation to the steps that you need to take to access debt, equity, credit, or hard money lending, you're not dependent on your independent knowledge to understand the smartest ways of creating a capital mix for your business, a financial mix for your business. You're not dependent on your knowledge in the event that you don't have it to identify the smartest ways to leverage your debt. And most importantly, you're not dependent on your knowledge if you don't have all of that knowledge to be able to mitigate debt. The ability to take informed action means that you have someone or a group of persons by your side that have been there. They have done that. They have tested their system. The systems are working. They're absolutely certain that their technique applied over and over again will give you the best results. This is success leave clues. And when you work with people that has that track record, it really helps you to save time, money, and stress. And that's the ability to take informed action. If you don't have the knowledge, you don't have the experience, you can draw upon the subject matter expert to help you move that process forward. And you see, this is where you want to invest your time, your talent, and resources to building up quality relationships with the right people, because this enables you to make smart investment decisions. All right. So that's as much as I want to get into today as relates to the proactive leadership and why it is necessary to put yourself in that position of strength, to think ahead, to see beyond problems, and to take informed action to achieve desired results. Of course, this topic could be tremendously expanded upon, but in the interest of time, I'm going to pause at this particular point. Now, I want to say that this program comes to you with the kind compliments of 10x B&M LLC out of New York. And if you look on the screen, you will see our website, which is 10xbmllc.com. Check out our website to see what we are doing in terms of real estate management. This program also comes to you with the kind compliments of the name of the big company here is 10x Branding and Marketing. Take a look at the website. I've just shown this website to you. I also want to take some time and look at pitchdeck101.org. This arm of the opera talks about financial instruments and the work that we are doing to put you in contact with financial specialists, whether that's debt, financial instruments, equity, credit, or creative finance. And I'll talk about that in a short while. We give you access to these persons. You can make contact with my office by using the number that is shown on the screen. And in the event that you need help in accessing market, accessing capital, growing and expanding your brand, and we should be your go-to people. Now, having talked about that, I want to move the topic down a little bit. There's two more talking points that I have here today. I want to talk about the three common denominators for success in business and in life. And then I want to talk about understanding capital markets. And this is important. So the next time you make an attempt to purchase your home, the next time you consider investing in real estate portfolios, the next time you think about investing in a business startup, these are important concepts that you want to take away here today. So you don't want to miss what I'm going to be saying. Now, let's shift attention now to some important common denominators. You see, in business and in life, it's important for you to have the right common denominators around you. Now, what exactly am I saying? There are three important common denominators that you want to focus on when you're attempting to make smart investment decisions. The first is what we call the human resources. Again, I just emphasize this. Many businesses fail because you do not have the right relationships with the right people. So, investing in this common denominator is vital. The human resource element is vital to grow your organization. It's vital to accessing the right information. It's vital in terms of consumerism. The human resource element is very, very important. I'm not going to go deep into this analysis today. I'm at least just pointing out to you some important common denominators that you want to focus on when you're positioning yourself to be smart, to make smart investment decisions. I cannot emphasize the importance of human resource. All right, access to the right human resource, either to work and grow your value proposition, or to help you have access to the right resources to move a process forward. Now, there's technical resources that is also vital because the right technical resources can help to accelerate visibility, reach, and impact. The right technical resources can help to accelerate, you know, productivity and innovation and distribution of products and services. So these are important common denominators for success that you want to consider. The last common denominator that I'm going to touch briefly on is what we call capital resources. Well, I think this is the moment that most people have been waiting on, and that's to hear me talk about capital resources. Now, we are now at the point where we're going to talk about understanding capital resources. Now, one of the things that we are seeing is that very often persons attempt to buy capital. Now, that capital could be credit. As on the screen, you're seeing the credit. And we're saying here that is a number of important things that you want to understand about credit. You want to understand credit portfolio. And what exactly do I mean by credit portfolios? There are a number of financial instruments in the credit portfolios. And I'm going to explain briefly what I'm saying here. There is trade lines, and there's the tier three trade lines, and all of them provide some form of credit. For example, you have vendor credit, it's a form of credit. You have store credit, it's a form of credit. You have cash credit, it's a form of credit. Now, having access to this and understanding these portfolios can bring tremendous advantage to you. Tremendous advantage to you. And I want to give a quick example. Let's take, for example, that you want to start a business, but you do not have capital to start that business. What options do you have available? In most cases, depending on where you're in the world, you're thinking that I have to go to the commercial bank and I can access capital from the commercial bank. But it's important to recognize that in going to the commercial bank, you have to reach certain pre-qualification criteria. And if you fail to reach those pre-qualification criteria, the financial institutions will not allocate monies to you. Okay? So perhaps understanding credit portfolios can be advantageous to you. And let me show you exactly how this can be advantageous to you. You want to start a business, but you don't have the liquid cash. You don't have, you know, the cash flow is king. So what can you do? You can contact the big stores. You can perhaps leverage your SSN or your ITIN, and you can get a line of credit, which we call a store credit. Now, there are many stores that may allow you to access $5,000 in vendor credit. And $5,000 is a decent amount of money for small business. And I'm talking 5,000 US dollars. In some parts of the world, that might work out, equate to about $1 million. It's a decent start. So you don't have to have the cash credit, but here is where you have the vendor credit. And the vendor credit allows you to access things within the store that you can now purchase and resell, make a profit on it, offset that debt, and wash and repeat this process over and over and over again. It's just like if you're taking a loan and you're taking the loan to make a purchase, stock the business, sell your goods, and make back your payment. There are some other advantages here. When you leverage store credit, is you might get a net 30, 60, or 90. Depending on the life cycle of that line of credit, you have no debt obligation to pay. You don't have any APR to pay on those debts. And that is tremendous leverage. But to be able to optimize the use of these leverage, it's necessary for you to really take the time to really understand what you're getting into. And again, this is why we always say think ahead, see beyond problems, and take informed action to achieve desired results. We at 10X Branding and Marketing, uh, Pitch Deck 101, we work with our clients to ensure that you have the right information that will help you to make better business decisions, better life choices. So it's important that you take the time to understand the instrument. All right. So when we talk about credit portfolio, you can make a choice that, hey, I'm going to start with vendor credit and then I'm going to go to store credit. Now, what store credit means? Store credit means that you have another plus here because there are a number of stores, including Granger and Quail and Office Depot, a range of other companies, Walmart, that will gift you store credit. And this is where you may get a Visa card with a spending limit of, let us say, between five to $10,000. Now, here the beauty of this: with the vendor credit, you have to spend the funds at the vendor. With the store credit, you're now able to utilize that credit line, that trade line across the world. That's a, taking baby step all the way up. The beauty about doing all of this too is as you lay the foundation, because remember, you started from ground zero. You don't have track record. You don't have a sponsor to say, hey, I know I'm going to endorse this person. I'm going to use my FICO to give them a boost so they can get immediate cash flow. You don't have all of that. So you started from ground zero. But this is giving you a tremendous opportunity to grow and to scale and to do it fast. Now, here the beauty about what I'm saying here too. You may be able to get a $5,000 or $10,000, depending on your FICO or your PayDex or your ITIN, from these vendors or from these stores. But this is a system that you can wash and repeat, or you don't even have to wash, you can repeat it. And here is where you can have 5 companies providing you with trade lines, and it's quite possible we have these trade lines, not that we have used it, but we have these trade lines, and you can have 5 companies that is giving you $500. That is $25,000. You can have 5 companies giving you $10,000. That's $50,000. And these are monies that you can put into your business startup. So you don't have to struggle with debt that has different pre-qualification criteria and has different debt obligation. Once you leverage these net 30, 60, or 90 properly, you have absolutely no interest to pay on these debt instruments. So it is important to take the time to understand what you're getting into. All right, take the time to understand what you're getting into. So when I talk about debt instruments, debt portfolios, credit portfolios, in this case, we are talking about credit portfolios, and I'm looking at four important things that you want to know about credit portfolios. Okay, so I trust that you have a lot there to look at, to consider, to think about, and you can put us into some of your techniques to grow your business with $0. And if you need help, I want to encourage you to reach out to us at 10x Brandon and Marketing LLC. It's based in New York. You can call the numbers on your screen, and we will be so happy to interface with you and give you the support that you need to grow and scale your ideas, your vision. All right, we are here to give you support. I'm going to give you two websites. You can go to this website to learn some of what we're doing in terms of real estate management. And you can go to pitchdeck101.org to learn about some of what we're doing in terms of the financial markets and in terms of helping businesses to build a strong brand. All right, so you can go to those places to get some information. Look back at this broadcast, replay, if you would have missed the information. Now let's get back to it. And today we are talking about smart investment decisions. And I trust that you're taking a lot of smart investment decisions. We just talked about credit portfolio, and if you know how to leverage this in the right way, you can start a business with limited risk. You can scale the business with tremendous possibility if you use all of the right techniques to make that happen. Now, I want to move on a little bit, and I now want to talk a little bit about another concept, and which is what we call the credit pre-qualification. Now, all of what I just talked about is possible because, in my view, credit is perhaps the lowest hanging fruit when it comes to access to financial instruments. And when I examine the credit portfolio, you be the judge of this. All right. To access credit, what you basically need is your SSN. And your SSN allows financial institutions to check your background. They're going to be looking at things like your credit history, your utilization ratio. They're going to be looking at things of, these different types of stuff to inform their investment decisions with you. They're going to be looking at your credit score. They're going to pull, depending on which institution you're working with, they're going to either do a pull from Experian, Equifax, and TransUnion. If it's for personal, if it's business, they're going to most likely pull your DNB and also look at Equifax business and Experian business. So having your SSN, it means that you're generating a credit score, your FICO score. And by simply having this, it opens doors for you to access capital. Tremendous opportunities for you to access capital. Again, this is why I would always say America is one of the best countries to be in because of the tremendous opportunity that it has for people, creative thinkers, to live the best quality of life possible once you have the right information, the right support system around you. The sky is the limit. All right. Um, so the basic pre-qualification that you need is your SSN. Now, in the case of a foreign national, you may need to have your ITIN. And while there's not a lot of information out there about using your ITIN as a foreign national to start to get a FICO score, we plan to do a lot of programs on this to really help to educate the public as to how to leverage your ITIN to start to build, start to get your your FICO score, and to also get a PAYDEX score. I, as a foreign national, my mom and dad, they're both Americans, but I'm a foreign national. I have been able to generate a FICO score. I have been able to generate a PAYDEX score. So these are some of the experience that we will be sharing with you over a period of time, and really helping you to understand some of the best practices in helping you to grow and to scale. We have a number of CPAs and legal minds and business consultants on our team to work with you to help you navigate the financial world, to navigate the business world, and to make the best decisions possible. All right, in terms of the business, you would not only need your SSN or your ITIN, you would also need your EIN. And with these simple things, all right, you need a proper business registration if you're going for business credit and so forth. The business needs to be registered properly. You need to have some of the basics, but I don't want to complicate it in terms of going through the list of things, because if you're going for personal credit, you just need your FICO. Sorry, you need your FICO. You need a place of address, contact information, and this is as basic as it's get. All right, as basic as it's get. The pre-qualification criteria. In terms of your business, is slightly different. I'll get into that at another date. Now, what we're talking about here today is information that we want to provide that will help you to make better decisions the next time you're going to take credit. So I want to talk about credit leverage. At the back of your mind, as you buy credit, as you leverage credit, you want to be asking yourself, do I have the best leverage in mind? And the ability to leverage credit should not be based on a hunch, should not be based on a speculation, should not be based on secondary data that is likely to be outdated. It should be based on you being market sensitive, first of all, being market oriented. There's always a right and wrong way to buy and leverage debt, equity, credit, or hard money lending. You want to ensure that you have the right information. All right. Now, we've heard story of credit leverage, and great minds like Robert Kiyosaki talk about their experiences where they were able to leverage credit to invest in an income producing asset. The mistake that they didn't make, they didn't take that credit, leverage it into income producing assets that wasn't given positive cash flow. Because there's one thing with investing in income producing asset, and there's a quite another in investing in income producing asset that is giving you a surplus, that is giving you positive cash flow. These are important concepts that you want to take the time to really understand. Do you have the right PFA on your side? Do you have the right professional financial advisor and personal financial advisor on your side that is helping you to make the best decision possible when it comes to understanding financial portfolio? Today, we're going to spend some time looking at credit financial instruments. Perhaps in other broadcasts, we're going to look at the debt, equity, and credit, because I want to go for some depths here today. All right. So before you take any debt, whether you're taking, store credit or, vendor credit or cash credit, one of the things that you really want to focus on is, do you have the best leverage plan in place? And one of the things that we talk about in our master classes and our consultancy training and programs, you don't want to do this on speculation. You don't want to leverage any form of capital on a speculation. You don't want to leverage any capital on data that is outdated. You want to know that it's going to give you a positive cash flow. Because the reality of leveraging credit is that if you don't understand some of the basic elements of credit, and I haven't gone into that today, all right? If you don't understand some of the basic elements of leveraging credit, you're going to end up in tremendous trouble. And this again is why so many millions of persons, again you know, over 90 million persons, need support in debt alleviation, debt management. My mission here, our mission here at 10x Branding and Marketing LLC and Pitch Deck 101.org is really to provide information to people that will help them to make better business and better life decision. So you can make what we call smart investment decision. Smart investment decisions that puts monies in your pocket and keep that process going for days, for weeks, for months, and for years to come. You need the right information. All right. So once we do a proper diagnostic of where you are, we are able to point you in the direction of smart credit leverage. Okay? Smart credit leverage. You need to take the time to understand. I'm going to say this briefly. You need to understand things like your statement. You need to take time to understand things like your balance. You need to take time to understand things like your billing cycle. You need to take time to understand things like your due date and minimum balance due. Don't ever pay the minimum balance due because you're going to have a balance transfer. These are important concepts that you want to learn about the credit process. What are those factors that influences your credit score? You want to take the time to understand what is, you know, payment history. It accounts for 35% of what is reported on your credit score. You want to take the time to understand things like your credit utilization. This accounts for 30% of what is reported on your credit score. But sometimes you know these things, but you don't really understand it. You're reading your statement and you don't understand what's going on here. You don't understand nothing about your billing cycle. Now, the common saying is that you should never utilize in excess of, you know, 29% of your available balance. And that's true and false. If you don't know what you're doing, of course, don't utilize in excess of 30%, 29% of your available balance. And, you know, by the time you get to your due date, you want to bring it down as low as possible so as not to have a balance carried over. But here the other flip side of this. When you're educated about how to use the instrument itself, you can max the card up, but you need to understand something about the open and close dates. And if you don't understand it, you're going to hang yourself. And that's exactly what a lot of Americans are doing. I'm interfacing with a number of consumers of credit cards that really don't understand the statement. So we have to spend time helping them to understand it. And there are cases that they just don't get it. So we just have to say, do X, Y, and Z to help them to mitigate the process. So take the time, reach out to us, and let us help you navigate this entire process so you don't have to end up in debt. You don't have to end up in stress. You don't have to have sleepless night, but you can smile all the way to the bank because you have the right kind of information that is really helping you to build wealth and to build it fast. Now, the last thing that I want to talk about today in terms of things that you should know about credit is credit mitigation. Credit mitigation. This is something that you really want to take the time to understand. Now, let me say this. Whether you're taking a debt, equity, credit, hard money lending, you need to have a strategy in place to mitigate it. And there are a number of mitigation techniques. I briefly looked at some of them early on. Again, once you understand your statement, once you understand open and close date, and you really understand this, you can optimize your utilization of credit, but you need to bring it down below 29%, below 30% by the end of the cycle. And you need to also, to avoid paying interest on this credit, you need to bring your balance down to zero by the time you get to your due date. These are some credit card hacks that you should take the time to learn, apply, and master. And here is where you can have credit. You can max it out, full utilization of the credit, and not pay interest of it because you understand how to mitigate this process. Now I'm going to say this to you. This is not advice. I'm not saying to you go out there and do this if you don't know what you're doing. But if you know what you're doing, yes. If you have the right mentor, the right coach, the right support system around you to help you to do this in a safe way, yes. All right. And so these are things that I really want you to think about. As I get into debt financing and I apply the same techniques, I will also be talking a lot of how to leverage debt into real estate and how to mitigate that process. There's something that we call the amortization schedule, but I'm not going to get into it today. I'm going to stop here today. I'm just going to quickly recap some of what we talked about today. Now, in today's program, I begin by putting tremendous emphasis on why I believe America is the best country to live in. And I highlighted a number of reasons why. I said you can easily access debt, capital, credit, instruments, hard money lending, creative financing. You're able to access these instruments, which means that once you are a serious thinker, once you're one of those persons who is not comfortable with less, but you want to position yourself to attain more, you want to contribute to economic development and social development, America is one of the best countries to be in because they give you access to capital. And later on, again, we will talk about once you get into entrepreneurship, what are some of those incentives that are there for you. I'm a part of a number of federal government training, and a lot of information is out there. Over a period of time, I will definitely provide you with some of those information so you can always be in the know. All right. We have also talked about a few other things in relation to today's topic. We talk about proactive leadership, and you want to be proactive. You want to be able to think ahead, see beyond problems, and take informed action. But I talked today about credit. Are you able to think ahead the next time you're going to select a credit portfolio? Are you able to see beyond problems the next time you go to select a credit portfolio? Are you able to go beyond the problems to take informed action when it comes to accessing credit portfolios? These are things that I want to encourage you to work on. Again, you don't have to do it all by yourself. Get a mentor, get a coach, and they will definitely support you, perhaps until you reach that point where you have your wings and you can fly. You can do things on your own now because you have enough information. I also talk very briefly about the three common denominator. I talk about the importance of having the right human resources around you. Most challenges in people's life today is largely because you're not investing in building the right relationship with the right people. Now I know, getting along with people might be tough, and people may have their own, whatever that is, and it's tough for you to get along. But I'm saying to you that if you want to be successful, you need to find the right people. You need to figure this thing out. All right. Connecting with the right people. I must say that we at Global Capital Inc., 10X Branding and Marketing LLC out of New York, We have invested a lot of time building up the right relationship with um, the right people in the developed world. And why? Because we want to do more for people who are serious about growing skill and making impact in this world. We talk briefly about technical resources, and we talk about one element of capital resources today. We talk a lot about debt. We talk about, sorry, credit and capital. And on the credit capital, we talk about understanding credit portfolios. We talk about understanding credit pre-qualifications. We talk about credit leverage, and we talk about credit mitigation. So I really trust that you enjoyed today's program. I must say it has been a tremendous pleasure being with you today. And I look forward to doing this with you more frequently. And in the event you're joining me for the first time, you're looking at smart investment decisions. Okay? So we'll do this again soon. Remember, do like our YouTube pages, wherever you find us on Facebook, LinkedIn, and Instagram. Do like and follow, and do share. Do make a comment so you can help us to put this content in front of more people. My name is Gary Thompson. I'm a business development consultant by profession. I'm a humanitarian by nature, and I'm the self published author for several books. See you in the next broadcast. Be blessed.